Hi everyone, welcome back to ASX Market Watch. Thank you so much for joining me today. It's great to have you here checking out the markets with me. What we do is we look at the charts and we look at the indices around the world, because if we were to believe market wizard William O'Neill, he says that 3 out of 4 stocks will follow the overall market. And if we know which way the index is heading, then we could potentially know which way 3 out of 4 stocks are heading as well. So because of that, we check out the All Ords down under. We look at the FTSE in Europe, we look at Dow Jones in America, and we look at the Hang Seng in Asia as well. So we do really check out the world, and it's a great way to sort of supplement the way you currently trade or invest. So you might do it differently, but this is just another great way to get another view of where the world is heading. Not to mention, all of the predictions and calls that we've been making over the last few months have been absolutely spot on the money. Now this is extremely exciting, and it's also extremely fun, because let's face it, I mean, looking at the markets is fun, and being right is also fun. So anyway guys, let's get straight into it. Seriously, we've got the All Ords down under. This is the market that I trade personally, and I absolutely love it. And again, what we said last week, just really quickly, all these bars down here, they have long tails, okay? So what that means is they went down throughout the day, and I'll just enlarge it a little bit here. Long tails, so down throughout the day, closed back up on its highs. So what that means is that buyers came in throughout the day, and they actually they pushed the market back up. This indicates strength, and especially because it all happened around the same level, it indicates super strength, like the Hulk almost, but better, because I love the markets better than that. But seriously, around this same level, it means that there's someone's buying because of these long-tailed bars. The market's been pushed back up over the end of the day, and that's where someone is buying. Now, as we said last week, we expected the market to start to rise, and we also made a pretty bold call last week that the market in Australia would head to 5,500 over the next few months. This was a very bold prediction, but obviously it's something that may occur. Obviously keep your stop losses in as well, guys. My current stop loss is below the previous trough right here on the All Ordinaries at 4,647 approximately. So anyway, apart from that, where are we heading at the moment? And this is probably one of the most exciting things about the All Ordinaries at the moment, is because what we've been looking at is Elliott Wave. Now Elliott Wave, we go, you guys already know this, seriously, you've got 1, 2, 3, 4, 5 waves up. Very simplistic view of it, of course. However, wave 4, which we're currently in, tends to unfold in a sideways movement. Now that's obviously exactly what's been happening over the last, from sort of October to December. The market's starting to break out now. Now what that actually resembles is something called a Darvas Box. I mean, people have called it hundreds of different names. It could be a continuation pattern. It could be, you could see a flag in there. You could see a pennant. Could see a triangle if you looked hard enough as well. Guys, seriously, there are 100 different things you could call it. But one of these guys, Nicholas Darvas, in the 60s, I believe, or late 60s, or early 60s, maybe late 50s, he caught one of the greatest bull markets in history. He's got a fantastic book, How I Made $2 Million in the Market, in the stock market, and in it he describes his method. Now his method has come to be known as a Darvas Box, and all it is a range of price, so a sideways range of price. And as you can see here, if we just enlarge it a little bit, we've got obviously this is a daily chart, guys, so each of these bars is one day, but we've got a bit of a sideways movement, and it's got a floor, as you can see, where the market hasn't been able to sort of go below, and it's got a ceiling where the market hasn't been able to go above. Now the way you trade, or traditionally a Darvas Box, is a breakout from the top would be your entry signal, and the bottom of the box would actually be your stop loss. So this is a great way to physically trade a Darvas Box, or a continuation pattern, or a wave 4, an Elliott Wave, whatever you want to call it. Hundreds of different people will call it hundreds of different things, and even trade it in hundreds of different ways. But that's one of the great ways you can actually physically use that to be sure of yourself, to keep your risks safe, especially by keeping your stop loss in, and also to make money if it does go in your favor. Happy days on the All Ordinaries. Loving the market at the moment. Obviously there's a bit of money to be made, and the target still stands. So early target is 4,900 for the All Ordinaries, and if we wanted to be looking at where it could be potentially heading, 5,500 is the longer term target for the All Ordinaries as well, as we said last week. As I said, we've been right an extremely large amount of times, so hopefully this one will come to fruition as well. This is the Dow Jones, guys, and again, what did we find last week? And I feel like I'm just repeating myself, because obviously the same things are happening, and the market is panning out exactly as we said. The market is finding consolidation around the previous highs. So consolidation around the previous highs is something that tends to happen. This is also one of the things that Nicholas Darvas did mention, so that sort of just brings your Nicholas Darvas or your Darvas box to fruition again. And what have we got here? That's exactly right, guys. It's a bit of a Darvas box sort of forming or a formation. As you can see, we've got the ceiling at the moment where the market hasn't been able to go above, at least over the last sort of few months, and then we've got the floor right here where the market hasn't been able to go below, and so we've got this sideways movement. A breakout to the upside would be a great buy signal, and you'd put your stop loss down the bottom of the Darvas box there. So that's again on the Dow Jones and around the world, just showing you how interlinked the markets actually are as well, guys, which is just a beautiful thing. And of course, yeah, so that's your sort of Darvas box on the Dow Jones as well. Looking at the FTSE, obviously we've got a very similar situation on the FTSE as well. We've got consolidation. Here we go. There's your previous high. How good is that? The market is consolidating at that previous high. Now, as we said, like guys, why does it actually consolidate at the previous highs? Simply because the people who bought down here, they're like, I've made some money now, I might actually try and sell my stock. Okay, shablam, they sell. But as the market gets higher and higher, more and more people start to get excited, and they say, well, hang on a minute, I don't want to miss this train, I want to get on the train and I want to buy. So you got people here and they're like, I'm selling because I bought down here, and there are people who are saying, okay, I'm going to start buying. What does that mean? What does that mean for the market? It means that it goes sideways because it's being pushed and pulled in each direction, and what will happen is eventually it will break out either to the upside or the downside. I'm actually banking on the upside, and again, for the FTSE, if we wanted a projected target, what we could actually be doing is a projection here for the FTSE. Initial target for the FTSE would be 5,950, and if we were to go larger than that, we'd be potentially looking at about 6,600. That would be the top, one of the top targets for the FTSE again. So obviously it's in an uptrend as well. So pretty simple stuff, guys. And again, like, the trading techniques that you use should not be complex. They shouldn't be too complicated, because quite frankly, then you won't actually use them. Again, this is just one of the ways that you can supplement your current trading or investing style, but using these techniques and methods can make you extremely successful, and of course it is a little bit of fun as well. So thanks again for stopping by, guys. It was really good to have you. Don't forget to trade those Darvas boxes when you do see them emerge. They're a great, fantastic tool. Until then, I will see you next week, and happy trending. Bye for now.